And it's interesting because traditionally, again, as you see how short the banks have gotten while the price has risen, that's typically when the hammer drops. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, a quick video on the gold market and specifically whether the price is about to get smashed. As you can see in our chart here, this is a 3-year chart, and gold is up quite a bit, in particular over the past month, as you can see right here, about 1420 or so. And what I've been looking at is, again, you see down in the section here, this is a rough approximation of the banks. So you see this red line showing that the commercial banks, who have a reputation for usually when they get short, often you see a price smash. Going back here, you can see banks very short, price gets smoked. Then as they're getting less short, it rises. Here you get more short, price drops. And we've really seen this play out, both gold and silver, for the last couple of years. It's not an exact science, although in the past couple of months I've been taking educated guesses at timing these things. And it's interesting because traditionally, again, as you see how short the banks have gotten while the price has risen, that's typically when the hammer drops. Although I've been surprised how, especially in the last 2 weeks, I don't remember in the last, maybe since 2011, when you would see gold and silver up significantly after the close in New York. And it makes me wonder, are we going to see the smash, or have we reached the point where something has fundamentally changed? Obviously, I talk a lot about that on the channel, about how you have leverage of 500 to 1 for every ounce of metal. There's that many claims on it, which sets up a situation where eventually, if someone shows up for their metal, it's not there, that you have the short squeeze of a lifetime. The key question is, when do we get there? I think how this resolves could be a key question, because I would think either you see the price smashed, or if not, given especially the positioning in gold, perhaps that is the first sign that something, at least something in the pattern, has changed. Whether that means that the banks have lost their ability to raise and lower the price at will, I'm not sure if that's the case just yet, although if we see the metals continue to move higher while the banks are short, certainly would be a good potential indicator. Add in that, you know, they're playing battleship in the Straits of Hormuz, where Iran's capturing British tankers. And again, you have a lot of volatile personalities here that aren't known for their ability to back down and go to reason. Deutsche Bank is out there. The Fed's getting ready to cut rates, which I've wondered if perhaps maybe when the Fed does that rate cut, as much as it's priced in, is that a signal to the world that, wow, this last 10 years, they did all this stuff and they still need to cut rates again? Could that spark a really bigger, more mainstream move into gold and silver? We'll see. But in addition to that, Ted Butler has also noticed some delays into the delivery of the SLV fund, which means that there are people buying and metals being deposited. Why there are delays, you know, you can make your best educated guesses. We don't know for sure yet, but certainly, you know, we see how it goes with momentum in the West. So as the price rises, more people jump in. So certainly, if the price continues to rise, there is somewhat of a self-fulfilling effect, where as the price rises, you start getting more mainstream interest, which is again why I'm wondering if we have the hammer coming in the near future, because if not, it will be interesting to see how quickly this goes. And one last note to keep in mind, I'm actually doing a book about the big silver short. called The Big Silver Short, which digs into all of this in particular to silver. And one of the things that came up during one of the interviews I did was how back in 2008, really you had a shortage where there wasn't, this was when Bear and Lehman were failing and there was no silver available. So even when it was priced at $9, it cost you $17 or $18. It actually cost the dealers $17 or $18 to get it from the mint. And for a while, there was no supply available. And I talked with Andy Schechtman, owner of Miles Franklin, quite a bit. He talks about how during his 30 years in the business, 5 or 6 times, he's seen how quickly the silver supply chain can get really tight. So kind of hard to know an exact answer of how all these things converge, but you have silver below the cost of production, all these other factors, and in either case, we'll wrap up for today, but certainly something to keep an eye on. That is what I am watching. So go ahead and hit the subscribe button. We'll keep you posted through what is going to be an exciting bull market. Whenever it really gets kicked off, I still think this is just the tip of the beginning. So with that said, thanks for watching, and I will see you again soon.